Welcome to TradeTheNBA.com. This is John. This reports for the 4th. Well, Friday was no surprise. We broke out to new highs. Bulls did what they needed to do, which is what we were talking about. They were at that point where it's like, okay, they're going to be the ones that have to put up. It's not a whole lot of short activity. In fact, shorts for the most part through this whole run have propelled this all the way through to some pretty spectacular highs. But we saw that clearly. The shift when uh, cyan went under red was the clearest one, but as soon as shakeout started turning positive, back here at the beginning of it, down at the 42, just broached the 46, came back off that a little bit. Again, that 45.45 is still going to be the return back to. But even when we're looking at MBI readings at this particular stage, 3.7 on the weight, not a whole lot going to happen with that. And DOC magenta, MBI magenta, and that is still above 33. So no issues there. Cyan's still below red on the DOC here, and plenty of money. So Bulls have everything they need to continue the rally. The question becomes, you see attacks in the Middle East, and some things going on that are starting to potentially put some question marks, so to speak, on world events. Nothing dramatic has broken through just yet, but that potential still exists, and that's definitely something that can have meaningful impact. From an NQ standpoint, a lot weaker. I'm finally seeing for the first time significant move of MBI weight, now back above, almost 12 level. And it hasn't affected the DOC just yet, but you're starting to see that compression. We had the breakaway move, which wasn't able to do much from a NASDAQ standpoint, even though we saw the S&P break out to new highs on the same situation. So a little bit of a laggard, but the fact that the market has held up as well as it has with that kind of softness within the NASDAQ is pretty impressive. So this has been a continuation of the weakness here with the magenta below yellow, and now yellow approaching that critical 25. It needs to pivot above there if it's going to hold on to any significance. Otherwise, we're going to be looking at a move back towards that 76%, which would be horrible, healthy within that range. Treasuries continuing to move towards potential for easing. Powell didn't really change anything, saying that, blah, 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 and yada, yada, yada. Pretty much everything is just going to stay the way it is, and we'll try and micromanage within our overnight windows and things like that to adjust. Oil not popping up here right now, but currently in the middle 70, low 73.4 range. Not bad. You would think that with the tensions rising potentially in the Gulf, you might see a spike in that. Hasn't occurred. So for now, everything's still tranquil. Hiding under the euro, just filling back some of the positive extremes, still a bit way out of whack given where the eurozone is. So that we see all the time, and then it trades back. The interesting one here is the significant breakout of cryptos, and this correlates to what gold has been doing, and long overdue. We talked about how gold needed to start its breakout and that it had been held back, but ultimately the force is just going to continue to push forward, in particular when we see such strong central bank buying instead of buying U.S. treasuries. So that is a secondary item. It's like, okay, we'll just hold on to the physical gold and you can keep your treasury notes. It's an interesting one because, of course, there's no guaranteed return in gold, except for the fact they just don't want to invest in U.S. deficits and this need that it's sort of like the shark starting to sense some blood in the water there, because you're looking at huge funding issues for deficit. And, in the past, we would say that would be a drain on the economy and draw from it, but not in today's world when they're just print money out of air. So, and it's not even money, it's just digital. And the reality is most of what's created is digital. And from that standpoint, isn't an actual physical thing. If it translated into real physical commodity situation, you think the inflation rate is high now. Oh my. be staggering at that particular stage. So from a 50K standpoint, you can see shorts have taken a little bit of a lead right here, and that could pull us back towards that 50% mark. If it continues, though, you're still looking at a full reset. So I wouldn't expect a whole lot from a downside at this particular stage from it, unless that changes. And you'd have to see a pretty significant move of DOC steel, either dipping all the way back below the negative 13 or getting back above that zero line, neutralizing its impact. But all we're doing is just filling back in. We had positive extremes going back to, well, all the way down to the 45.82. So it's just got a little bit more to go to fill those completely. And nothing from our 5K tick yet. So let's just look at a 5-minute chart as a substitute, and we could see that literally whole day just boom, started off big bounce, and then from there it was just leveling off, finishing towards the highs. So pretty benign overall end to things overall. And as we look at the current market, it's just been soft in the European session, still remaining that way. And it'll just be a matter of waiting for the pre-market to open. I think that will bring back some bargain hunters who think that things are still inexpensive. I would not necessarily argue that myself, but obviously there's a couple of related issues to obviously the devaluation of the dollar continues to float price to some degree, and without any significant economic change that is visible, nothing wrong with where things are at. I think you're just going to get individual plays back and forth, and some of the rotations will be interesting to watch. But overall, the balance that we're looking at from the broader market overall, not in bad shape. As always, I will update you if anything relevant changes. Have a good one. Trade well.